Let's get more though. Chris Conway joining us now from the Australian Stock Report, live from our Melbourne studio. Chris, good afternoon to you. Markets, I guess, over the last couple of days has been somewhat interesting. Obviously, yesterday we saw quite a bounce in markets, and you know, we've obviously seen those commodity prices pick up a little bit. How are you seeing markets track, particularly over the next few weeks?
Good afternoon, Ingrid. Look, I think the Aussie market is a little bit overcooked at the moment. It's at the top side of a range that capped the market towards the end of last year. It printed a fairly bearish technical sell signal yesterday off that key resistance level. There's a couple of other indicators showing as overbought. And I think the broader question is, you know, where are the next catalysts going to come from? Sure, we had the RBA cut, and that has done a job for the market in pushing it higher to this point, but I don't see a whole lot of fundamental catalysts. There's also perhaps the temptation for those that have ridden the move higher to start taking profits as well, and then the whole sell in May go away idiom becomes a self-fulfilling prophecy. So I wouldn't be surprised to see the market pull back and consolidate from here. I think 5150 to 5200 is probably a logical point for it to pull back into. It's
interesting because, you know, looking at the commodity space, that's part of the reason why we've seen the recent gains in the market. I just wonder if oil prices continue to rise and we do see a bit of a rebound in commodity prices continue or be sustained, do you think markets can continue the run? I mean, would you still say they're overcooked?
Yeah, look, in terms of the commodity space in particular, I can see oil moving back towards $50 a barrel. It's one of the reasons why I bought some Santos this morning. But iron ore, I don't think the same supply and demand dynamics are operating in that market. So with oil, a lot of US shale production that was marginal has gone offline. So the supply side dynamics are changing, and the demand side dynamics are changing as well because it's the US driving season, or the Northern Hemisphere driving season, so demand has picked up. That was reflected in the inventories numbers overnight. But those same things, those same dynamics aren't changing in the iron ore market. The iron ore market is still massively oversupplied. Demand is not picking up out of China other than stimulatory measures. The restocking, which is a seasonal move, has passed from the mills in China. So yes, I think oil can continue higher. That will obviously drag the local oilers up, but I think it's a different story for iron ore. So in answer to your original question, I don't think that's a strong enough factor to continue to drive the market higher. And I think we've already seen some decoupling overnight with oil prices pushing higher, but US equity markets, of course, moving lower.
Just picking up with what you said there on Santos and buying into Santos this morning, looking at the stock today, $4.13 is where it's sitting right now. How much upside do you see in Santos if the oil price does go or continue above that sort of $50 mark, if you see it getting there?
Yeah, so Santos recently traded at $4.80, and I think that's a reasonable target to have being long this stock. Oil would need to get to $50 a barrel and perhaps even a little bit higher for it to get back up there. So, you know, that's the target that we're looking for. But longer term, sort of 3 to 6 months out, potentially oil can move into the 60 to 70 handle. So I think there's enough upside in there to warrant taking the trade, of course, hence why we took it this morning.
All right, let's move on to the retail space because Myer obviously out with its numbers today, and it was a pretty solid number from Myer. It's certainly a beat on analyst expectations, and it does look like analysts are saying, you know, maybe this is time for a turnaround. This is the turnaround actually showing through for Myer. The stock up 7% today to $1.20. Do you see upside from here? That's the question.
Look, it's a really good question, Ingrid. Myer is just a stock that I just cannot get excited about it. You know, they're spending $600 million playing catch up to a lot of other retailers that are already doing particularly well, some of which go by the names of Premier Investments, JB Hi-Fi. They're not a specialty retailer, so there's no reason for a consumer to get up and walk out their front door and go to the store. They have a lot of slow-moving, low-margin products still that they're holding in store. So, yeah, look, I think because they're coming off such a low base, they can get some wins as they play catch up to the rest of the market, but that's only a useful strategy if the rest of the market stands still. If the rest of the market continues to grow and develop and build a further online presence, well, Myer is still going to be a significant distance behind. So I can't see where they fit in this space. I don't get excited about them. It feeds into my belief that bricks and mortar retailing is dying a sort of slow, cruel death. So whilst great numbers today and a positive reaction from the market, I struggle to see further upside in this one long term.
Okay, we will talk Myer in just a moment in a bit more detail, but I want to quickly mention Aristocrat as well, because this one up by 11% today at $11.64. It was a pretty stellar trade update from them. What was the key driver for this? Is it all about sort of gaining market share in Australia and the US?
Yeah, absolutely. So they've increased their market share in Australia, taken some market share away from Ainsworth. They've brought some new products to market, or new gaming machines. But it's that joint venture in America as well, and the potential to expand from Oklahoma into the Californian market, which we all know is one of the biggest markets in the world, biggest economies in the world. So it's that growth potential that they've already delivered on with the great beat today, but the further expectation that they can grow further, that they're really be rewarded for. Sorry, I should say. So I think, if you're holding this stock, a great result today, up 14%, I think, what it was when I was heading to the studio. But there does seem to be room for even further growth and further good profit numbers.
Yeah, okay, we'll watch that one, because it certainly is an interesting move in Aristocrat. $11.64, as mentioned, that's a fresh high for that one, reaching $11.92 earlier today. Chris Conway, appreciate your time on the program as always. Thank you.
Thank you, Ingrid.
Chris Conway there from Australian Stock Report out of Melbourne.